Hi everyone. It looks like we've got a few people joining. How you doing, Kyle? How you doing, Kane?
Very good. Thanks for having us on this morning, mate.
Yeah, really good. Thank you. Yeah, thanks for having us.
Exciting. Looks like we've got about 29 attendees so far. I imagine that may creep up as the sort of next coming minutes go by. A few people have mentioned that they're going to be sort of watching the recording. It's really a pleasure to have this time to really speak about what we're going to be covering off today in this webinar. We've got some amazing brain power in the room today. For those who don't know, we've got Kane Mazzoni, our head analyst. We'll do a bit of more of a formal introduction in a moment's time. And we've got Carl Stagall, an amazing trader with a massive trading group in Australia. And yeah, a lot of brain power in the room. It's a real privilege to have you join us as well, Carl. Thanks for your time.
Thanks
Yeah.
a lot, guys.
Amazing. So we'll just kick right off. Probably a few more people are joining now. So I think the key thing here is, we've got about 45 minutes. We want to be really direct with value and give a lot of free value in this session. The elephant in the room is the markets. Well, Bitcoin seems relatively stable, but the altcoin's quite down. I think that's the theme for today. But I wanted to start with a bit of a positive quote. So in the back, we have a nice framed image there from Marcus Aurelius. It pretty much says, the happiness of your life depends upon the quality of your thoughts. So if we can stay positive and have great thoughts, the rest will all sort of flow through. But yeah, I thought I'd start on a positive note. It's a pleasure to have you all. And I guess the theme for today is, as the title states, sort of we want to combine. So being a research-led brokerage, we want to combine fundamental analysis as well as technical analysis to try to drive crypto outperformance in 2025. This year's going to be a big year. It's going to be volatile. It's not going to be easy. We all know that. And so mainly Kane and I and the analyst team, we do a lot of research here at the brokerage and to uncover the crypto space. And we also got Paul, who runs an amazing trading group. So the reason I have there, this is actually taken from Kyle's texture, is 10,000 hours to mastery. So for any skill, it takes about 10,000 hours to get to that 100% proficiency point. And I think it's an amazing reflection of those that are in the room today, who've probably been in the space for about 8 or so years, putting in those hours, learning, uncovering, just specializing in this one field. And I think that's sort of a reflection on where we're trying to get to. And it's not going to be perfect; it's never going to be easy. There's full of highs and lows, but hopefully this webinar can really help everyone get some free value. So I'll move to the next slide where we can do more of a formal introduction. So the host for today, so some of you may know, some of you may not. I see a couple of new names, so I imagine a few family and friends have pointed you to this webinar. So welcome if it's your first time learning about who we are and what we do. So myself, I'm George Kaltekis, based in Melbourne, Australia. I'm a senior broker at Uptrade, lead the brokerage team here, and bit about myself. So from the crypto world, I'm an official Casper ambassador. They're a top 50 project, quite a strong fundamental project that those that have been in the space for quite a while would know. Got about over 8 years of successful in trading, investing in crypto. I might as well pass it to you, Kane. Been doing a lot of the talking. We'd love to hear from you.
Yeah, definitely. Yeah, so my name's Kane. I'm the head of research and analytics at Uptrade. I've been in the market for about 7 years myself. So I'm 24, started pretty early when I was 17 years old, basically in year 12 of high school. Since then, I've had the privilege to work alongside a couple big funds, one being Apollo Crypto, which is an institutional crypto asset manager and multi-strategy fund. I worked there in 2022. And then I also had the privilege to work at Upside DAO, which is a VC, venture capitalist and incubator. So working as an analyst there as well.
Amazing. Kyle, do you want to take it away and blow everyone away with your experience?
Yeah. So I got into trading basically when I was at university, pretty much in about 2008 during the global financial crisis. So learned a lot back then. And got into crypto mainly in about 2017. Obviously got to participate in the greatest bull run of all time, which was that 3K to 20K in about 5 weeks. But then we started the Market Mastery community, which now has 37,000 members in it. And I've been teaching, educating basically how to make money out of the crypto markets since then. And we've got one of the largest Discord communities as well, which basically is all about trading. We've got the /Discord, backslash Bitcoin Discord, actually. Just to prove that we're the real OGs in the space. But yeah, that's pretty much it. Obviously, done a lot with a whole heap of different other communities and things, and working with the guys at AI Wealth Pro as well, which have an amazing platform for an auto trading program. So yeah, that's pretty much the main things that I'm working on at the moment.
Amazing. I guess in our spare time, you'd find us at the beach as well, doing a bit of surfing, maybe down at Brighton Beach.
Not much surfing down there, but I can definitely go for a swim.
Amazing. All right, so probably a lot of new faces. Just want to do a quick little overview. I think Cole's already mentioned it. For us, being a private brokerage, we offer each client a personalised relationship with an experienced crypto broker who supports you throughout your investment journey, helping you to reach your financial goals. We're pretty qualified in who we bring on board, so each have about minimum 5 years of proven success in trading and investing. We're very selective about that. It's very important because of how nuanced the market is, and I guess Market Mastery obviously offers a leading trading course in cryptocurrency, specifically for that asset class, but has a very, very high overview of macroeconomics. And the team are just phenomenal, a part of the community, and they hold themselves to a very high standard. So they're just amazing to be a part of. So enough about us and the companies. Let's dive into really why we're here today. And I want this to be a valuable session for our clients, for mutual clients, and just to help people during this crazy stage of the market where we've got altcoins just absolutely bleeding, trying to find how we can find an edge in the markets. And I think that's going to be the key theme here. That's the elephant in the room. But let's talk on, of course, this is always there. This is not financial advice. The first thing is that this is all observational and research in nature. Nothing in this presentation constitutes financial advice. And it's just a workshop for education purposes. I think that's also very important to note. So let's talk about why. Firstly, why are we in this room here today? Well, me, I'm just in this room alone, actually, at the moment, but virtually, there's about 38 people here, probably asking why am I on this. So it's really, a lot of you ask me as my clients, we talk about a great project, but then they're also asking, when do I enter and when do I sell? I'm not a licensed financial advisor. No financial advisor will give you that advice, in fact. So really, it's about understanding the technical analysis around optimizing entries and exits. And that's question is more around technical analysis. So that's why I have here to equip you with fundamentals and technicals to optimize long-term entries and exits in high-caliber crypto assets. So right now, we're seeing narratives are constantly shifting, and market dynamics have actually evolved quite a lot since 2021 and 2017 and prior cycles. We got rising competition, we got increasing challenges in the market, and in my opinion, this is a trader's market. So it's time to sharpen the edge. Right now, that might change in the near future, but right now, a lot of profit taking and also it's what we call PvP, player versus player. So everyone in this room is actually fighting for liquidity or for profits against each other. We're actually trading against each other. It's a bit of a psychological thing there. So I always say a fundamental analysis strategy, technical analysis, and a macroeconomic overlay, you're bulletproof. You've got unshakable strategy at the bottom there, and that's why we're here. Quickly, we touched on this, but it probably is worth noting, and I'm going to be mindful of time today. So the current dynamic in the landscape is there's altcoin inflation. We all know that, and that's the hard truth. As you can see, in 2013, cycle was 500 tokens, 2017, 3,000. 2021, 3 million, and we're just growing exponentially.
100 million tokens.
100 million tokens. Yeah. So, of course, we're in a quantitative tightening environment at the moment. We're not really printing money, and there's not a lot of excess money being out there. So a lot more dilution of tokens means we're fighting for, again, even more for liquidity. So what happened there? Number one is we've got liquidity dilution. We've got too many tokens, capital's being spread thin, each asset's pumping a lot lower than in past cycles. Now, this could all change in the future if we get some changing in macroeconomic dynamics. Kyle will touch on that later in the session. We've had meme token impacts, which has just been an absolute, I don't know how to say it lightly, but there's a lot of daily new launches. We got a lot of quick pump and dumps from Trump launching the official Trump token. to Argentinian governments being involved in scams and a lot of new launches that are just stealing liquidity from the market. So attention's been fragmented. That's the reality. The market's evolved. There are smarter investors. We're taking more profits. There's a focus on utility now. Actually, we're seeing a trend shift towards utility tokens. As of last year, we had Q1, Q2, 2024 meme coins with a driving narrative. Now we're seeing a shift to more utility revenue based, and that's going to be the theme of today. We have less random pumps. So in my opinion, to summarize, the key to survival is sticking to the fundamentals and technicals, ignoring short-term noise, staying positive, having quality thoughts, and also waiting for proper timing or optimized entries. So I did a bit of a fun joke last night. I went through Twitter and had a look at some of the statements that people were saying on there, or X now these days, and I put a quote down the bottom from someone that I just quickly found. The markets look like one of the worst in history. No, scratch that. It is one of the worst. Every chart's bleeding red and sentiment's at rock bottom, but this is the game. So I just went through about 50 of those quotes I could find. I just picked that one out of just to explain where we're at. And that's for the altcoins. Now, Bitcoin's okay, relatively okay at the moment in terms of relative strength. But I think that the key reason why I put that quote there is that, historically, if you were to say from an opportunity of buying, people would be saying arguably that may be an actual better entry when there's blood in the streets, so to speak. So not saying it is, but it could be if we get an upswing in the market. So I think really I want to now talk about some of the utility-based fundamental projects that we've seen as relative strength or outliers in the market, given their structure, how they generate revenue, their value proposition in the market. But this is where I wanted to bring Kane Bizzoni, our head analyst at Uptrade and head of analytics and research, to really talk for the next 15 minutes about some of the key projects that we've seen as trending amongst the wider market.
Yeah, awesome. Thank you. So basically when we look at assets, you can kind of break it into two different sections, which is the fundamentals and the technicals. At heart, I am a fundamentalist, so I always do my due diligence in looking at that. So in particular, when we look at fundamentals, there's a few key things we want to be looking at. This is a team. If it's a viable product as well, tokenomics and token value accrual. So here we have Hyperliquid on the screen. Ones that's actually been performing very well of recent. So to break this down, basically Hyperliquid is a layer one blockchain and a DEX that is trying to onboard the next wave of tokenized assets. So basically what this is like real world assets as well as the current digital assets that are currently trading. And by doing so, they basically launched at without any VC funding at a pretty high valuation, around about $1 billion, I'm pretty sure, straight off the bat. And 1 second as I get, a chart up for you guys. Sorry. Yeah, perfect. Oh yeah, sorry. It's on your screen there. Sorry, I didn't see that. Sorry. But yeah, so one standout success was the no VC funding. It also allocated over 70% of its supply to airdrop holders. So what was so successful about this was that a lot of projects, as you're aware, they have VCs that end up dumping on retail investors. We all saw it in 2021. It became a pretty common trend where, these VCs would get in 10, 100 times cheaper than, us retail investors. And we were the ones that ended up buying, at these very high premium prices. So there's become a common trend this cycle where a lot of assets and projects like meme coins started it in 2024, and now a lot of projects like Hyperliquid, they're trying to kind of stay clear of VC funding, and that's more to give back to the community and make sure that they're having sustainable growth over time. So a bit about Hyperliquid, the backstory. Basically, it launched back in 2022, and that was by Jeffrey after the FTX crash in 2022. And basically what happened was that Jeffrey saw that there was still a lot of trading volume occurring on DEXs, despite the fact that we were in a bear market. And he hence launched Hyperliquid to basically fill that void that had been lost by FTX, which was the leading perpetual exchange at the time. And doing so, basically, fast forward to now, they've done over $600 billion in volume. They reached over $25 billion in fully diluted valuation. And they've finally launched their own EVM compatible chain. And basically, what that means is it allows that chain to interact with other chains in the Ethereum ecosystem. Now, when we look at something like Hyperliquid, we do want to look at those metrics. We want to look at volume because that's a revenue generator for them, and it's very important to be yielding revenue. We also want to look at the L1 metrics because as a blockchain, you want to make sure that it's actually performing at a high standard. So currently it processes over 200,000 transactions per second. The block time is 0.2 seconds. Daily volume is over $3 billion, and they have over 350,000 active users. So comparing them to quite a few different blockchains, this is very, very high performing. These stats are, some of the best amongst their competition. So, they've done very, very well in doing so.
So it sounds like
Yeah.
they're trying to steal a lot of the volume from the big two, Binance, Bybit, some of the biggest exchanges in the world, and Hyperliquid are trying to cement themselves as a key player in that space from a decentralized point of view. No custody, but fully decentralized. Would that sound correct? Okay.
Yeah, exactly. So it is a bit of a divergence from, the current system being, using centralized exchanges and trying to bring more users onto the decentralized on-chain system. So doing that, Hyperliquid is trying to take that and, run with it. So yeah. We also do want to look at the viable product and the token value accrual for Hype. So the token utility is basically the best way to see if a token has value accrual because a lot of projects do end up just launching tokens for the sake of it, more or less like a money grab, where their token doesn't actually provide any extra value to the project and they don't get rewarded or it doesn't actually correlate to the price appreciation. So with Hype, we see that, it's a proof of stake network. You can actually use it for staking and governance. You can also use Hype now as the gas token for their chain. So another very important one as you need it to interact with, trading as well as when different decentralized applications are built on that chain, you'll need that to process transactions. And then finally, buybacks. They are doing buybacks, which is where the project actually uses revenue that they generate from all the fees. They use that to buy back the token and then burn it. That basically reduces the supply while also increasing demand. And everyone knows as supply decreases, demand increases, we see price appreciation.
So, Kane, you're obviously, a trader, investor, you do a lot of trading yourself. If you were to say from your perspective, what is so attractive about Hyperliquid in comparison to traditional exchanges for you personally? Just to really simplify this down.
Yeah, so the most attractive feature is transparency and liquidity. So with a centralized exchange, obviously we all know that it isn't transparent. We don't see on-chain transactions occurring. You're also having to have all your assets on a centralized exchange, which is a third-party risk. Whereas when you're using something like Hyperliquid, you obviously have your own wallet, you have your own keys, you have full custody of your assets at the time. You're also having you got more access to liquidity as Hyperliquid has some of the most biggest liquidity providers in the whole crypto space. So you have better trade execution. And yeah, it becomes a better overall experience when you have that. So you have obviously all the new token launches as well. So you don't have to wait for token listings. So yeah, those are some really key factors. And then, as I said, you get to interact with different DeFi applications as well. So yeah, three big ones. Mainly, I guess if you want to compare it to FTX, like you can use someone like a centralized exchange like FTX that ends up collapsing because misusing of funds, or you can use a decentralized perpetual exchange like Hyperliquid, where you have full custody. You don't have to worry about that. So yeah, I think those are two very distinct reasons why I would be leaning towards something like this.
Amazing. Well, in the interest of time, let's power through
For
to
sure.
the next one.
Awesome. So yeah, the next one we have is Aero. Aero is the leading decentralized exchange on the Base network. So this is a DeFi play, one of the favorites in my opinion as well. So basically with the Base ecosystem, we should look at that first. And it is actually currently the sixth largest in terms of TVL. And TVL on in a simplified way is basically the total value locked on an exchange or on a project or ecosystem. So, for example, for Base, when we look at total value locked, it is basically a really good indicator of how much money is inflowing into that ecosystem. And when we see money flowing into an ecosystem, we see more developers want to build there. And when we see more developers want to build there, we see more users want to use that chain. So it becomes almost like a flywheel where, these all start to, work together to build and grow the ecosystem. And that's actually one of the key reasons why Base was one of the top performing ecosystems in 2024 and 2025. So yeah, Aero's basically the largest DeFi application on Base at the moment. It accounts for about 32% of the total value locked on Base, which is around $1 billion. It also accounts for 65% of all transaction volume on Base. So that's twice as much as its next competitor, which is Uniswap, which is actually the largest decentralized exchange across all networks.
So
Now,
to summarize
yes,
there as well, the biggest thing that I see is the revenue. This is a revenue generating protocol. It has about
yeah.
37 million in revenue a month, which is quite rare.
Mm.
So we're looking at sort of traditional finance models here, where you can look at PE ratios, etc. So that's what's
Yeah, exactly. So I'll touch on that because where I was coming is that yeah, as a token holder, you actually earn 100% of the revenue generated from traders. So they have their own little flywheel effect they've got going here, where traders make a trade, fees go to the token holders get error emitted to liquidity providers, and they provide even more liquidity, better price execution for those traders. So, as you said, one of the biggest things that we're seeing is the monthly fees and the volume. Now, Arrow's actually achieved upwards of $40 million in monthly volume this year. So I think that was back in January. It achieved $40 million dollars. Now, if you annualize that, it would equate to $480 million per year. Now, this is where you can kind of, as you said, use a traditional valuation method like a PE ratio for stock in the crypto realm, because when you've got something that is a general revenue sharing asset, that's where you can actually kind of start to use that. So, for example, if we use a PE ratio, we use the price being the fully diluted valuation of $1 billion. We divide it by the current earnings of $480 million per year. And that gives us a PE ratio of just over 2.1x. Now, if you look at that on a traditional valuation, that is extremely low. And we don't really ever see any equities or companies with PE ratios of less than 15. So being 2.1, this can basically correlate to the following. Basically, it could be the fact that it's high risk and low growth opportunity, or it's simply undervalued. Now, due to the global adoption of crypto and the growth of the base network being so high, I personally rule out the first one of being of low growth potential. This is such a strong and fast growing industry. We're seeing Coinbase being, the founders of the base ecosystem really driving this whole ecosystem, and it's becoming almost a funnel for a lot of investors. So, in my opinion, yeah, it's really good to look at those different methods, because now, as you can see, you can value it on a traditional scale if you have revenue sharing products like Aero.
And also, Base have about 100 million wallets that they're trying to bridge over to the Base network. Coinbase uses, correct? So, being positioned in the US, I think that's quite an interesting dynamic there.
Yeah,
Some of the things that we
100%.
Very low market cap still on it as well. It's only just under 600 mil.
Yeah, exactly. So definitely room to grow there. Definitely one to watch as well.
Absolutely. Awesome. I want to be very respectful of everybody's time. So let's keep pushing forward. This is just going to be covered at a high level. Kane, do you want to talk a little bit about Mantra? We've seen this just power through the ranks, all-time high after all-time high, maybe cold. But to take us away with in a quick summary.
Yeah, Mantra is basically a real world asset layer one blockchain. Basically, what it's trying to do is bring the world's financial ecosystem on chain. And what that means is, looking at different real world assets like housing estates, traditional stocks, basically any asset like gold. And I think they're trying to tokenize it and bring it onto their chain. And basically, with real world assets, it's actually been one of the only sectors in recent months that have performed very well. It's actually the highest performing sector of recent. And yeah, Mantra's been one of the top performers in that sector. So yeah, a bit about real world assets. We've seen a few competition from the likes of Ondo and Chex. Ondo being one that's had backing from some of the largest asset managers in the world, such as BlackRock and Larry Finks, the CEO. And when you see someone like them backing Ondo and backing this whole sector in general, saying that tokenization of real world assets is coming and it's the future, it's really hard to shy away from the companies and projects that are trying to lead the innovation for this sector. So yeah, Mantra is one that's been quietly building in the background. It's currently, onboarding some really, really strong real world asset narratives. So yeah, definitely one to watch as well.
Beautiful, beautiful. Well, I think from there, we've covered off the fundamental side of some of these strong utility projects in DeFi or RWA. I think I really want to hand the floor now for the last, say, 15 or half an hour, depending on how long we want to run this session. I was hoping for 45, but we might need the extra 15 to Kyle to do your wizardry and talk a little bit more about technical analysis. As I said to a lot of your clients, you're asking me, how do I enter? Well, when do I enter? When do I sell? Of course, we can talk about the technicals, but really we want to give you the tools to do this. So Kyle, take it away. And if you want, you can even maybe share your screen as well, if you'd like.
Yeah, it's easy. I'll take over in a second. But yeah, basically the main thing that we teach our students is to use a long-term VWAP for entries, because it provides some of the best entries that you're going to get. And it gives really clear levels. I think one of the most important things with being a profitable trader is not having anything that's like confusing you. You need like really clear levels. Like, okay, if it's above this line, I want to be in the market. If it's below that line, I want to be out. So it's like, okay, there's a literal line in the sand, and it's very easy for you to make decisions around that, because I think one of the biggest things that kills people is analysis paralysis or hesitation. If you hesitate in trading, just like in anything else, you're done. You have to be able to make quick decisions and be super confident with them, right? So having the long-term VWAP basically puts a map on your chart, and then you have a bunch of different levels, and you trade based off what the price is doing and interacting with those levels. Now, the reason why our long-term VWAP levels work is because all of the hedge funds use VWAP to get in and out of the market, because if their clients, they're adding people's positions in or whatever like that, if they just go in on the VWAP, which is the average price, right? The volume weighted average price is what it stands for. They're basically, hedging their risk against getting them a bad entry. They're not going to get the absolute Pico bottom or the Pico top, but they're averaging in the current range that it's in, getting in and out of that price. So they like to buy in and around the VWAP because they feel like that's a fair price to be getting in. Now, what we do is we put a standard deviation either side of that VWAP, and that gives us our value area. So we have our value area high, and we have our value area low, and price interacts really well to these levels. And I'll show you in a second now just how much we're interacting with the Bitcoin VWAPs at the moment.
Well, I think the key thing there is that volume is the oxygen of trading. It's one of the most important things there. So if you're looking at the average weighted price, it does speak volumes, no pun intended. But Cole, take it away.
So one of the easiest things to do, guys, is you get your long-term VWAP and you look at the yearly chart, right? And price just interacts so much with this. I'll scroll back in a little bit. But this is our long-term VWAP, and you can see that this one is called the developing. So it's the current VWAP that started at the start of this year. And so we're the developing, which is DY, developing yearly VWAP, okay? And we can see here that basically since the start of February, we've seen a lot of buying every single time price comes below the VWAP, right? The value area low. So what we're seeing here at the moment is every single time we've dipped below that, we've seen a lot of buyers kick in, and price hasn't been able to close below it. At the moment, we might get our first close below it. Let's see if bulls push back up above. But I'm actually liking this strength that we're seeing here at the moment on BTC. So I'm not sure if you guys are aware or not, but the market was trying to take off overnight. And then about 2 a.m. our time, there was a bit of news released about Binance being sold for some unknown reason. And it ended up being FUD. CZ came out and refuted it, and the market started pushing up. So what's happened anyway is there's a lot of people that are now trapped inside this wick. And one of our other indicators, actually, I can bring up and I can show you. We'll have a quick look at it here. I can use one of our tools. We can have a look and we can see if, how many people are actually trapped below in that wick. So we can see here that there's actually a lot of volume in here. So this little chart that's pushing out the side here, that actually gives us a view of volume via price. Down the bottom here, we have our volume per candle, which is based on the time frame. But this is actually giving us volume by price inside this one candle here. So it's a really handy tool. It's actually order flow technique, which is one of the more advanced charts, which is looking at this, which gives you the absolute data on everything that's going on inside every single candle. If I zoom in here, I can see all the shorts, all the longs, basically that's going on inside that candle. Now, for most people, that just absolutely melts their brains. So we made a much easier way to look at this, which just gives you the volume via price. When you see a big wick like this and you see a big spike like that, that means that there's trap traders inside that wick that then have to rebuy if we reclaim the value area low here and push back up. So really easy way to look at this right now is if this breaks below the developing yearly value area low, then I'm looking for a rotation and a sell-off probably down to the previous year value area high. Now, if we can hold this and reclaim it, it looks like we've got a whole heap of trap traders below inside this wick here that will now be panicking. As soon as this closes back above as a green candle, if it closes a green candle, that'd be great for a reversal here. But if we start to push back into the developing yearly value area low, basically above 96K on the next candle, everybody that had a position, they got liquidated underneath here. You can see here how well it perfectly works because everybody puts their stop loss around the bottom of this wick here. And you can see that basically as soon as we came down and hit this wick, massive amounts of shorts got either stopped out or liquidated right there. And it's pretty typical to see that, right? So what happens is if we reclaim this value area low here, that means all these people are going to have to buy back in, and that's how you get a push back up. And then we'll be looking for a rotation play, which is a nice 7% move or 7,300% move back to the highs here. Now, if I go and have a quick look at our total market cap, we can see here that this is our previous year value area high for the total market cap. We can see that the price is interacting really nicely with that level as well, right? So we can see that the total market cap is actually being held up by the previous year value area high. Now, if we get a nice pin bar here and then reverse off that, then we're looking to go back to the highs. If we break below that, then I'm sorry to say that we were looking for a rotation back down to 2.5 trillion, which will probably bring Bitcoin back down to our previous year high, or even into this imbalance that's in this area here. So when the market pushes and you leave you have a big thrust candle, this area here, some people, the ICT guys, I'll call that a fair value gap, but really all it is an imbalance where the market moves really quickly and there's no sell orders all through there. And a lot of the time what will happen is you'll come back and retest that imbalance because basically it's a gap in the charts. Now, that gap that we've left by that imbalance actually perfectly lines up with this 82K area, all right? Which is pretty much our previous year value area high. So we've got a bit of confluence overlapping there. And then we also have the 1.272 at 83, which is our macro fib level, right? So all of those, that's going to be a really nice area if price does come back down to there. Do we know if price is going to come back down to there at the moment or not? It's impossible to tell, right? I don't like to forecast too far into the future what's going to happen, but I like to look at the chart and be like, okay, these are the levels that we want to take trades off. If it goes back above this level, I want to be long, I want to be risk on and looking for a rotation back to the highs and expecting the price, to do something like this. See how it interacts with the VWAP. And if we can get back above the developing yearly value area high, then I'm looking for a markup finally. And then that markup, I would expect us to take us to our macro fib targets, which are up here around the 2.272, which is our next macro fib target, which is 137K. Right, so that's if this consolidation stays as a reaccumulation, we end up pushing up. Now, the key things that is going to really determine what happens there is strength or weakness in the DXY. Now, Trump's policies, we're moving into macroeconomic space right now. Trump's policies are typically pretty bearish for the dollar because he wants to boost exports, right? So what we want to see, because obviously we're trading against the dollar and we also want to see global liquidity increase, is a rotation after we've trapped traders above the high here in the dollar. We want to see this have a rotation back down to the range low, maybe have a little bit of a rebound here, and then eventually come back down to the 95 area, right? I think that's what the Trump admin wants to see. And as you can see, as soon as Trump came in, on the 20th of January, we had a big sell-off in the dollar and it hasn't been able to recover since, right? So we expect to see continued weakness in the dollar. Now, what that helps with is an increase in global liquidity, right? Because everybody has loans in US dollars. So when US dollar decreases in value, that means if you're in Australia and you're Great Britain, your dollars or pounds can now buy more US dollars. So that increases global M2 in USD. Right, when that goes up, that actually is a financial loosening. So it loosens financial conditions. Right, when financial conditions loosen, that is much easier for risk assets to pump. And then we can see the NASDAQ and SPX 500 both push, and then we should see Bitcoin start to run up with that. Now, the other thing to think about as well with this is if we go and have a look here at our balance sheet of the Federal Reserve, we've actually had a decrease over the last pretty much since they started QT at the end of 2021, a decrease of about $2 trillion throughout here on the balance sheet, right? So they've been actively drawing money out of the economy to the tune of $2 trillion, right? They've been putting a bit back in through, the Treasury General account and reverse repo and stuff like that. But typically in general, we've seen the Fed withdraw $2 trillion. Now, so when we're in a tightening phase, that basically squeezes everything and thinking about, you're in financial tightening conditions, You basically imagine the Federal Reserve is strangling the market like this, right? And that's why altcoins have sucked up until now. And if you go and look at pretty much all stocks that are outside of the Magnificent Seven, a couple of gems like Palantir and obviously MicroStrategy and Coinbase, which have done really well because crypto. Outside of that, basically all low cap stocks have really struggled. That's why altcoins have really struggled as well. And the reason is because we're still early in the business cycle, right? So one of the things we look at is the manufacturing index, right? The PMIs, which is what we call the ISM. So the ISM is basically a survey that they do out to Hollywood big companies. And they talk to basically the CEOs and CFOs, and they get information on their orders, right? So for the first time in a long time, we've broken back above 50. Okay. And then also our lead, which is basically what we're expecting for next month. So our new orders is coming at 55, right? So that's a good sign that we're heading into the back end of the business cycle, which is when everybody has money once again and things start to flow. You start to have much more monetary flow throughout the economy. And then people have more cash. They feel richer. The wealth effect starts to kick in. And then they can spend more money on things like NFTs and altcoins and low cap stocks. And then the rest of everything else starts to catch up to the major movers, which at the moment is the Magnificent Seven and Bitcoin, right? So that's how the monetary aspect starts to flow, right? So the key things that we want to look at that's really easy is watching the DXY. If the DXY starts to rotate down to 100, Bitcoin will most likely push up to about 137K, all right? Now, what I'm watching for right now is how this ends up closing in 15 minutes. And then do we get a Morningstar reversal here, which is a 3-candle pattern. And I want to see it close above 96. It'd be great if we could get a pump candle and close back above 97. If we could get a candle that looked like this on tomorrow, then I'd be very confident that this is a low that gets put in. If it looks like that, we can close above this level here. I would be very confident that that's a low getting put in, and we would look for a rotation back to highs. I'd be targeting this order block here, which is our bearish order block, which is our red candle, right? We have an indicator which makes it very easy to look at these things. So if you're wondering what the green and red candles are, they're just order blocks, and these are basically magnets for price to rotate to. So this would be a really great trade, getting in here and rotating up to there, if we can have some strength and follow through on the next candle. So how I would trade that, I take a position, which I've already taken, stop loss below this wick here, and then I'm looking for the strength in the market to tell me on the next candle we get a strong close above 79.6, and then I would hold the trade up to here. If I get weakness in the next daily candle, I'll probably just close a trade, either a small loss or maybe a small win, right? So that's basically the way I look at that. Now, if Bitcoin can reverse here, and we do get a close above here, that means all our altcoins are going to finally pump, right? So one that we were just talking about, Hyperliquid, actually looks pretty nice here. So we had a really good little SFP just here off this wick, right? So we come down, sweep the low just there. I'm just going to turn on our long-term VWAP levels as well. Right, so we're looking at our previous year, value area low. It's trying to reclaim that. So when we get a reclaim of the value area low, this might struggle to get in, but if we get a reclaim of the value area low, then we're looking for a rotation to the value area high, which would be a push back to $30, right? And that would make sense because we seem to be in this chopping range. We'll sort of come back down, but you can see here that we're actually getting a really nice reaction off the developing yearly VWAP. So that's why this is a really nice spot to enter, basically. And what I want to see is Bitcoin strength and obviously strength in hype and get a really strong reversal off here. It was trying to push until obviously we had that bit of a sell-off. So a bit of a nasty daily candle here, 20% daily candle. So it is definitely chopping around, but we want to see the developing VWAP hold here. And if it can, it's a really good push, right? So that gives us a really nice line in the sand. It's like, okay, if the market can hold the developing yearly VWAP, I want to be in a long position here. I want to be looking for previous year value area high, or in this, looking at this, I would actually be looking at this like, okay, we've had a bit of a miniature bear market here where prices capitulate down and we're chopping sideways. So I would look for a markup. If we can break out of here and we can get above the previous year VWAP, which you can see, right, all throughout here, with rejections constantly off that level. So basically bouncing between the developing yearly VWAP and the previous year VWAP at the moment, this entire range, right? So now we're back down at the range low. We want to be looking for buys, right? Which I actually have just entered along there. If it just bleeds out and, Bitcoin just bleeds out as well, then this obviously will be a failed trade, right? And then we'll be looking for if it can hold the developing yearly value area low, right? So let's just say it fails and rolls and does something like this, and then we get a reversal here, comes back up and then rejects, then obviously you'll be looking to take a short from this point here, okay? Hopefully that makes sense. But at the moment, it looks like we're getting buying interest on the VWAP once again, similar to what we did all through back here. So I'm expecting a rotation to try and come back up at least the previous year VWAP or come up to the previous year value area high, okay? And so what I would do typically with a trade like that, if we could flip all of this price action throughout here, right? If we can flip all of that and turn that into support, so let's just say we get a really strong rally here and we get a nice bounce off that, that would be a really good entry to take off the top of the previous year VWAP, right? Because we want to see how price interacts with the current VWAP and then also the previous VWAPs as well. And that can be a really nice entry point if you get in a bit later, right? I'll give you an example of how this worked on SUI recently. Right, so here are some examples on SUI. We're sort of in, similar sort of space, right? This is the value area low of the previous year, right? Perfectly touched that, right? And then reclaimed through here, the developing, and then finally got above the previous year value area high. And this was the signal we gave to our community that we were looking for a rally through here because we've had come in, rejected, and then the third time. And then Bitcoin started acting bullishly as well. So we've got that confluence, market's ready to head up, right? Reclaim the value area low. That was our signal for our members to get in, right? And then we push really nicely. Now, if we go across to the daily time frame on this, you can see we got these really nice retests of the value area high. Then we get a pin bar here, another pin bar here. Those are our 3 entry candles before the pump and it finally takes off. Now, once again, SUI is back to the previous year value area high, and you can see we got nice pin bars and then a reversal. It's trying to hold that level again, right? So same deal. If we come into the developing yearly value area low, we're looking for a rotation back to the value area high. Okay, so that's basically how those work. Now, the other charts we wanted to look at was OM. Right, so this is probably the strongest chart, and this is why we were chatting with the boys recently and wanted to talk about it. Everything else has been dumping off and nuking, and this is just really, really strong. Okay, so we had a massive accumulation period, and it's had a huge run. Now, this is about 7 billion in market cap right now, but there seems to be something special about what's going on with this coin right now, and it has a lot of strength. So always hard to get a new position when it's pumping like this, but you can see back here, we did get an opportunity, obviously on the lower time frames, this is the daily, to buy a retest of the developing yearly VWAP just here, and that would have been a great entry. And so if we drop down to the 4-hour time frame, you can see that's our entry candle there, right? Pin bar off the developing VWAP, right? That's an obvious, really easy entry there for a 52% move, right? And then obviously back here as well, we got a really nice pin bar and then reclaim of the yearly value area low. And then obviously, we get a really strong rotation. And once that happens, now we're on top of the developing VWAP value area, and we see a lot of strength. So while we're above this, we can see a lot of strength. So what we're looking for next is either this is going to continue to go sideways as it has done back here and then pump while everything else is having really big pullbacks. It's always a good sign. When a market is moving sideways, while the rest of the market is dumping, it's a really good sign. As soon as Bitcoin finally bounces, it's going to take off and launch, which is every time Bitcoin did show strength recently, while it's been very weak, all the way throughout February, every time Bitcoin did show strength, we had nice pushes on OM, right? So what are we looking for here? It's a bit tough, being very high above the value area and just chopping sideways to get an entry, but you could maybe look for an entry off a swing failure pattern like that. You could try and get in on a wick when we get trap traders below the range, or if we do have a pullback to retest the value area high, and then we get a candle that looks like this one there, right? Those are the entry candles that we want to be taking, especially if it comes below the value area and then closes above, or it tags the top here and then closes back up here. Those would be the types of candles I'll be looking for. So basically what I'm looking for, guys, to make it extremely simple, is a pin bar like this that tags one of the key levels, either it be the value area low, the VWAP, or the value area high. And those are all typically great opportunities to be able to enter in the market. And this gives many opportunities to get in, even if you don't get the very, very bottom. Like, for example, when we were on SUI, we had so many great opportunities to enter into the market throughout this entire run in safe positions that we knew were high probability entries, right? And I think it works really well for people who aren't really, into technical analysis. All you're looking for is a reclaim of a level, and then you want to be in the market, right? And then you can just put your stop loss below the recent lows, right? If maybe you get stopped out once, like if you had have done it here, you would have got stopped out here. And then once it reclaims again, you put your stop loss below there, and then the trade plays out and you make heaps of money, right? So it's a really easy way to just, okay, the boys maybe talk about, okay, this is a great chart. This is something we want to be looking at. So this is a great project. This is something we want to be looking at. And then you guys are like, oh, Jesus, where should I enter? You can easily just get this up and be like, okay, how's price interacting to the value area? How's price interacting to the VWAP? And then when you get a retest of the VWAP, or you get a reclaim of the value area low, then bang, that's your opportunity to get a great entry, especially if the market has been in a bearish momentum, like we sort of have been on Bitcoin for a while now. A lot of charts are underneath their value area lows at the moment. Once you reclaim those value area lows and Bitcoin starts to take off and go on a run again, that's basically the easiest opportunity. Just take a position and then expecting it to push. So let's have a look at Aero as well. Now, this is a little bit of a tougher one because we haven't had as much price action history, but we can see here it attempted to bounce a couple of times off the previous year VWAP, and it sort of failed. So now what I would be looking for this to do, we need to see it have some strength. And I think it's probably going to need something to happen with Ethereum, because obviously, bases on Ethereum, etc., everything like that, for this to get exciting again. But I think this will be a great project once Ethereum finally takes off. So that'll be like a little tell that I'll be looking for. Either something big to be happening with base, or Ethereum starting to get a bit of love again. This is probably going to be a great project in the future, especially because the other project we looked at, about 7 billion, 8 billion market cap with Hype and OM. This is a much lower market cap coin, so it has a lot more room to grow. But to make it super easy, right, we have our previous year VWAP, right, which comes from the VWAP, and then year ends, and then that's what that line is just through there. And then we have our developing yearly value area low. So when these two levels get reclaimed, right, let's just say like Bitcoin and Ethereum are starting to push again, and these levels get, maybe we have a swing failure pattern here, and that liquidity sweep happens, right? Once this gets reclaimed, that's my signal. Bang, I want to be in the market. And then I'm looking for a rotation either up to the developing yearly value area high, or the previous year value area high up at 140, right? And then we can see how price reacts to that. If price then comes up and does something like this and then breaks the value area high, retests it, that's also a really nice entry. Obviously, it's a bit later, but like what we saw on SUI, interactions with the top of the value area highs can always be great entries, especially if you get like a nice pin bar or something like that, right? And we have bullish momentum in the rest of the market. That's what we're really looking for. Confluence with Bitcoin and everything else moving up, and then nailing those entries. You can do a safe entry with a really good stop loss that if the trade doesn't play out, that's part of the game. Sometimes we lose money, but you want to minimize it. And sometimes we make money when, we do get the nice entry and it plays out. And we're making a lot more on the trades that we let to run to our targets than what we lose when we get stopped out. And so if we do get a bounce off that value area high, then I'm looking for this to take out the previous all-time high and then probably run into price discovery. Right, and then if we do that, we can get up our macro fib levels, and then we'd be looking for maybe the 272 or the 1.618, which would be 3.3. So that ends up being a really great trade, especially from the value area low up to price extension for a price discovery push up to here. That ends up being a rotational trade of about 270%. So that is, in a nutshell, how we use really simple levels with the value areas from our VWAPs to make really clear and sharp decisions that you don't have to hesitate around.
Yeah, no, thank you for your wizardry, Kyle. That's amazing. I think that it looks like there's a lot of colors and things to look at, but in reality, it's just such a simple strategy. Just a VWAP. There's a few indicators there to look at. So, yeah, really thank you for that. And so I know that we are nearing the hour here, and so I wanted to quickly go back and just to summarize, and also have some times for some questions as well. We may run a little bit over, so apologies for that. But so I think the key theme there is that this is, and back to the start of the presentation, it's 10,000 hours to mastery. You're not going to get there on day one. It's going to be a compounding effort. And so I've personally done the Market Mastery 3.0 course myself. I've gone through it. To summarize my experiences, it is everything I need to know in one place. From 8 years of doing this, it's just a collective, resources in one little location, and I really loved it. So all we're trying to do here is get a little edge. We just looked at one indicator, one of the hundreds you see on this page here, which is the VWAP, and it's such a beautiful way to enter or exit, as we discussed. So I guess I will summarize it there and say, look, optimizing entries and exits is not an easy trade. It's not something that can be learned overnight. But if you do want to learn and gain a technical trading edge this year in 2025, I do think that the Market Mastery team and community are one of the best trading groups I've seen in the space. If you do express any interest to do the course and to be a part of their community, they're an amazing bunch of community. I'm part of it. If you express interest through Uptrade, you'll receive 9 months of free access to their private trading group as opposed to 3. So a total of 12 if you mention Uptrade. So that's a bit of an offer there as well. If you wish, you don't have to, of course, but I do think that it's helped me get an edge, and that's what I wanted to share with the wider group. So I think we'll wrap up there, and I wanted to really leave the floor for any questions. Can you see any, Kyle, that you can see there that have come up at all?
We've got 3 questions.
What's
the name of the VWAP indicator again? There are many VWAP indicators on TradingView. So we actually programmed our own version of it. So one of the guys that is part of the team at Market Mastery is Brendan, or Slimy, and is his crypto name, and he's actually a programmer. So he developed our long-term VWAP indicators specifically because it takes information from all the different exchanges, and that's probably the different thing between ours and a lot of other ones, to give you the correct levels. Because if you don't have the correct levels, like if you're just looking at the data coming from one exchange, it gives you completely different levels. So, and this is like a constant thing that has to be monitored in the background all the time to keep the levels at the correct place, to balance out all the volume and exchange data that's coming in. So that's why just using the ones that are on TradingView can be a little bit tough. And they will give you all different levels, but I think qualified one, which is a free one, is okay. But highly suggest, if you want to be using this strategy, to join our community and use the one that we programmed ourselves. There's a reason why we spend a lot of money and hours developing our own version of it, because the ones you get for free aren't going to give you the proper levels. So and then Alice asked, good morning, gents. Couple of projects on DEXs. Have you done any research in or heard about a project coming out of Dubai and Thomas Carlo called Everdex?
I imagine Kane probably directed to you, but I'm not sure if I've heard of that. Maybe you could do some diligence offline and review that, I'd imagine.
Yeah, I've heard of this one before. I'm pretty sure it's a DEX that's launching on Arbitrum. I'm pretty sure it's still in testnet, so I haven't done too much research on it. I think there's also like a separate arm where it has like a more centralized exchange as well. So it's like they're trying to juggle the both and make more or less a hybrid between them. But yeah, one I'll definitely have to look into a bit more once it goes mainnet or gets more information.
And the other question from Andrew McPhee. Is Hype a US-based entity, and do you think that is going to prove beneficial under Trump? I know that it's a decentralized exchange, which means it might not have any borders.
Yeah.
But from your understanding, Kane.
Yeah, so Hype being decentralized basically means that there's no actual entity behind the project. So if you were to look at maybe the founders, I know a few of the founders are from Singapore. They've actually gone to university at like Harvard and a few different ones in the US. So yeah, you can't basically say that as a US based entity, it would be more or less a decentralized entity across basically every global country. So yeah, it's hard to tell how it will benefit through Trump. It should benefit through just like the overall benefit that will come from Trump's like proactiveness through crypto, but it might not, yeah, have the same as like an XRP or something like that that's solely based, that was solely built in USA.
Amazing. So to summarize, it looks like we have a lot of trap traders in BTC at the moment, and there may be some positive macro news coming out that helps us, move forward in the next stage of the bull market that we're hoping for. And looks like we just sneaked in one more question from Luina. Did you see any early warning signs in this recent drawdown on alts from December high? So that we can take profit from the next local top instead of holding the bag. So the warning signs that would be around that would be more around macro technicals. Dax, so I'd point that direction to you. Did you see any sort of warning signs, Kyle?
There's a bit of a this high is a little bit of a hard one, to be honest. Like the main thing is that we had I'll show you on my charts. Let me share screen 1 second.
Sure.
The main thing was in October, the market peaked for global liquidity, and then we had that drawdown of global liquidity. So, when that happens, you can sort of expect a bit of a pullback across the board to happen. And that's why, it lags about 7 weeks. So now we're getting this to start to take off again in 7 weeks from, the 19th of Jan. We would expect the market to sort of take off again, which, takes us sort of mid-March. So that's 7-8 week lead time. It's not exact. It's not an exact science because it's not something that just this happens. It means that the market's going to pump for sure. But it's like liquidity flows. It's like pressure. It's sort of like the tide coming in or going out. So it's like when this happens, they pump a whole heap of market money in, and then we have basically the tide going out. That means that it's going to suck liquidity out of everything, right? So it's like when you see something like that happen, the tide goes out. It squeezes the neck of financial markets, and that was probably the biggest tell. If you're following Raoul Pal, he was talking about that happening a little bit as well, and obviously we were talking about that in our group as well. So there's always a risk, around January period that we would have a bit of a pullback. And if you go and look back to 2017, the same thing happened after Obama exited and Trump took over. You had this dump off in global liquidity. And a lot of that as well came from this strength and this really strong push that we had in the DXY. Because when the DXY pushes aggressively like that, global liquidity has a bit of a pullback. But it also has a lot to do with what the Treasury General is doing, what the Federal Reserve is doing and stuff like that. And they're all sucking money out of the economy basically. So you have global M2 start to come down, and that dropped about $4 trillion, right? So you had $4 trillion pullback, right? The markets sort of have a little bit of a pullback there. I wasn't expecting alts to collapse as bad as they did, but I think that is happening because basically like this whole thing that's going on with memes at the moment, and it's just creating like a bad energy. Especially probably one of the biggest tells was when the Trump coin put in its top with Melania coming out, and that was just like, I think everybody just got like a bad energy and vibe around crypto in general. And there was definitely a vibe shift when that happened. It sort of like painted the entire industry as just like a big scam. I think like when you feel like a vibe shift in the energy like that, when you have a weakening market because global liquidity is being sucked out of the market, it's never a good sign, right? And also, like, you got to remember, we just had the massive pump, right? We just had an absolutely massive pump from basically the early September, right? And the market pushed How much? 100%. And then altcoins pumped really aggressively as well. This is all while, the ISM is still underneath 50. Like we're not in the back end of the business cycle, so that's why I think alts are pushing and pulling back so much all the time, because people are trying to get behind rallies. They're trying to believe in something, the market wants to move, but there's not that sustained underlying growth in liquidity. Right? Because like we were looking at just before, if we look at the Federal Reserve, they're still sucking money out and they're not lowering interest rates either. So, I think what we need to wait for is basically QT to end, which is probably going to happen in the middle of the year. Interest rates start to get lowered a little bit, which I think will also start to happen in the middle of the year. The Treasury General account, which just started emptying last week, so that's about we're going to have a liquidity injection, basically the same as QE, of about $500 billion over the next couple of months as they empty the Treasury General account, because reverse repo is finally emptied now. So they need to add new liquidity into the market. It has to come from the TGA. And then we're going to have that whole circus about raising the debt ceiling again. And that'll probably happen in the middle of the year alongside QT finishing. And we'll start seeing more pressure on Jerome Powell and the Fed to end to start to lower interest rates, as well as Jerome Powell will leave as the chair of the Federal Reserve midway through the year. I think it's July. He's out, and Trump will put in a new appointee, which is definitely going to do whatever he wants, I would imagine, which would be to lower interest rates, right? So that will also, once again, weaken the dollar, right? Which also increases global liquidity, and that all helps Bitcoin to pump. So it's just a matter of time, I think, at the moment. It's like, how low do we go? Do we come down and hit this 82 level before we reverse, right? Which would end up putting in, something like this, right? And then a reclaim of this really nice TD9 order block that we have there, and a reclaim of 90 is basically the easiest long you'll ever have, from a reclaim of 90 to 140, basically. But we might not get that. So it's basically like, the game is sort of like, do we just round up here and then we have a low gets put in here and then a higher low, which would be very similar to what we had back here when we're putting this low on a massive capitulation. And then, about a month later, we put in the higher low there. And then that changes the trend. And then we're looking for a higher high here. Bang, that's in. That's a shift in market structure. Then we have a really nice bounce off our VWAP here. And then price takes off. So, if you want to talk about trades off VWAP, this was probably one of the best trades I've had in a long time. It was really easy trade. Pin bar, followed by a Morningstar reversal for confirmation off the VWAP, right, all the way up to taking it out of the highs here. It was about a 72% move on Bitcoin. And it's probably one of the easiest trades I've ever entered, right? So that's why this system works so well. And the same thing as well is we have this here, pin bar on the value area low. If that ends up closing as a Morningstar reversal, that's a really strong entry for us to look for the next move up, right? So that's what I'm looking at the moment.
Amazing. Well, really appreciate the insights there, Kyle. I think in the interest of time, I want to wrap up there and thank everyone for joining today and giving us their valuable time. And yeah, just want to thank you, Kane and Kyle, for joining us. There's a couple more questions, but I might have to get to that after this in a follow-up email. So yeah, everyone have a good rest of your day, and really appreciate the webinar.
Yeah, thank you,
guys. Thanks a lot for having us.
Yes, thank you.
Most welcome. Bye for now.
That's it.